Welcome to the Nebraska Soybean Board Weekly Market Roundup, being brought to you by Nebraska soybean farmers and their checkoff. I'm Susan Littlefield, and a week that we are going to talk about a variety of different influences. No surprise, we're talking weather. We just need to get the markets to up speed on that as well. We'll take a look at a cattle on feed report and some other outside influences that are affecting the trade. So stick around. As I like to say, we've got a lot to unpack on this week's episode.
Meet the champions of innovation in the heart of Nebraska. They're not just farmers, and they nurture more than just crops, pushing boundaries and turning challenges into opportunities. They trade knowledge and know-how, and their dedication doesn't end at harvest. It's in your every bite and every drive. The future of food, fuel, and fiber, and the future of Nebraska starts right here.
Welcome back once again. Joining us today, Jeff Peterson. Jeff is with Heartland Farm Partners, and we've got Kyle Bumsted with Allendale. And no surprise, I think when we were talking before we even started this program, we look like a bunch of farmers standing here, and the first thing we start talking about is this weather. And we're going to get to that here in just a moment. But I want to ask each of you, as I always do, what's your nugget, your takeaway overall picture of the markets this week? And Jeff, we'll start with you.
Sure. Over on the grain side, I think a couple things that we ended up seeing on the corn and the soybean side. I think from a technical perspective, we did come down and find some really pretty good support. We haven't seen that over on the wheat side. I think that positions us well, especially where it seems like the markets have really sold off and the funds have continued to sell this thing. And I think some of that's really a little bit too premature. So I think that's what we're looking at right now, Susan.
All right, and we'll switch over. Kyle, what are you seeing as you look at your kind of takeaway for the week?
That's a good question. I saw a lot of money flow today. Friday, obviously, was the quadruple witching day here for the equity. So you saw a lot of movement here, getting out of the equity contracts and rolling those out too. Also, as Jeff pointed out here, like on the soybean complex, we went down a touch lows I think we haven't seen since November of 2021. So, I mean, obviously, we could be finding some support here in this bean complex. The calculation here for VSR and the wheat complex, that wrapped up today. It does not appear that they're going to be adding more carry into the complex here. I think that moving average was around 77%, and I believe it has to be closer to 84% to add more carry into that market. But regardless, wheat still has a lot of carry, and the corn market was kind of susceptible here to option expiration and things like that. We've got first notice day coming up next week, so I think there's some movement there.
All right. Well, let's talk about this weather because we're talking about it. We know farmers and ranchers are talking about it. Markets, not so much. So I kind of want to get your takeaway. And Jeff, I'll start with you from a grain perspective. Why hasn't it brought it back in to the market trade as of yet?
Yeah, I think if we sit back and look at it, so we think about where this crop is at. We've got, for the most part, most of the crop in. There's going to be a little bit of it that isn't going to get planted, and that's going to show up on the prevent plant side. But there's not enough information out there yet. We'll get more insight into that next week when we get the planted acreage report. So then we have to look at, okay, what impacts the weather having on the crop? And you really got the tale of two areas. You've got an area really for, think of it, the kind of the south or southeast third of Iowa on over into Illinois, Indiana, Ohio, down into Missouri, over into Kentucky. That area there has been extremely warm. And it's going to continue that way through the weekend, but then that ridge is going to move its way back to the west. And what the market's looking at, though, is when that market or when that ridge does move back, it does look like there's going to be some showers that is going to move in. Now, last week in the crop progress numbers, we did see crop conditions come down. It brought the good to excellent ratings down. And I think the market needs to see that happen additionally. I think the market was a little surprised last week when we saw Illinois drop 9% on good to excellent rating. But I think the other thing that's going to happen, Susan, looking in those areas that's really been too wet, that would be a lot of Minnesota, eastern South Dakota, parts of northeast Nebraska, and then across Iowa, really kind of northwest, 2/3 of Iowa. I think we're getting wet enough in some of those areas that we're also going to see the conditions come even in those areas because of just the extreme wet conditions, even though the market still looks at it as rain makes grain.
Yeah. Well, our thoughts and our prayers go out to everybody in that area. We all were talking about this before we went on for this program in parts of Brandon, South Dakota, for example, where the river is rising about 6 inches an hour. That's definitely going to put a slowdown in any sort of planting progress that takes place. But Kyle, from a livestock perspective, rain has been welcomed in so many parts that haven't seen rain in 3-4 years. I know I drove out to the Sandhills earlier this week for the Sandhills Ranch Expo, and there was a lot of happy cows that were belly plus up in some really good looking grass. And that's not something we always see out in the sandhills.
No, the last few years we haven't seen that out here in the sandhills, but yeah, we are belly deep in grass, and in fact, having some trouble getting hay put up right now around rain showers and things like that. So the old timers always said, if you're having trouble putting up hay, you're probably going to have a pretty decent corn crop, and that's kind of the way it's looking right now on the 21st of June here in this immediate area. So what I do want to kind of point out though is, a few years ago when we had all the flooding issues in North Dakota and South Dakota and places like that, it took a while. It took a couple of years for the market to kind of realize that maybe the crop wasn't there. And we first saw that when the basis started getting pretty good up there. You saw the basis make the move first, and the spread started making the move. And then futures traders realized, like, oh, wait, commercials want to buy corn. We better get on board with this. So then that's finally when we saw the futures come alive here. So another thing that I'm looking at here is it's supposed to be almost triple digit heat here starting the week out next week, Susan. And looking at these live cattle, these fat cattle in the yard, you can make a case if you got some that are about ready to go, get them on a truck. They're worth more on a truck than they are laying in the pile out there. If you lose one or something like that, this first initial heat wave is probably going to have an immediate effect on intake and stuff like that. So this is where you're going to start to find in the heat, you're going to start to find your chronics and things like that. So you could see some marketing of cattle here if this heat sticks around in the Western Corn Belt.
Well, in the way that the packers are chomping at the bit, I mean, making phone calls saying, hey, we need cattle today that is supposed to be slaughtered a week and a half from now. It's going to take higher money to get this moving. I had one guy say, hey, I need at least $2 more if you want these cattle a week and a half early.
Yeah, you're seeing some of that. And some of that we've come across before has just been a straight scheduling conflict. So I can't read too much into it sometimes when people are getting, like this, like the market is right now. There's a couple things holding this market up. Number one's the box beef. That's holding things up here. And I think if we were to see shorter kills here, them start to reduce their kill a little bit, you're going to back up a few numbers there too. So we are at a time frame on the calendar where box beef does historically break and start working down. Have not seen that yet. I'm in the camp at any point in time this thing could break and start to roll over as far as the box beef goes. Then you're going to start to see those slaughter reductions here, so the packer can try to keep that margin if they still got to keep paying up to buy cattle. Now, after the close of the markets here today, we've got several 188 bids in Kansas and Texas, some trading at that. We traded several on an address basis at 310 here in the north. We traded 310 yesterday in Kansas for cattle to ship north. We traded some 197 and some 198 here in Nebraska on a live basis here after the markets closed.
So, Jeff, what's it going to take? I mean, we're talking some higher numbers that we're getting to see possibly on the cash side, but what is it going to take for the grain market, this corn and beans, really to kind of turn themselves around?
Well, I think we started seeing that. We know that the funds have continued to sell this week, and we came down and found some technical support. Now what we end up having to do is we have to be able to see some weather behind that to be able to really get some legs underneath this. A good thing on both, mainly on the corn, but it also does show up on the bean side. We've got the 100-day moving averages above us. And if we could get the corn market back up and get it back up above the 100-day moving average, what that would cause is that the funds who were sellers on the way down, you hit that level, then they will physically start coming back in and buying that market and to get out of those shorts. And in order to do that, though, we are going to have to see some continued hot conditions and drier conditions, but we're going to have to see beyond that. We're going to have to see also the crop condition, the good to excellent ratings continue to drop. We know that we're a ways out before we'll probably see any adjustments on yield, because at the end of the day, what they're looking at is they're really saying, what do we think this yield's going to do? The yield at 181 on the corn, it's not that that's out of reach at this point, but it's a pretty small probability of being able to hit that number. Keep in mind, last year we were at 177.3. The 52 bushel the acre yield number over there on the soybean side, that's possible yet. We got a lot of time ahead of us yet. But as we go forward, you got that yield aspect will come down. We'll also know more next week after we get the planted acreage numbers, and when we see that won't tell the whole story, but it'll tell some of the story. It sure feels like we're going to lower the amount of acres a number of ways. We're going to bring the corn acres down maybe 1 million, 1.5 million. We're going to increase prevent plant out there because there's going to be some of these areas that have not been able to get plant. We're going to move some of the acres over to soybeans, but then from soybean side, I think some of them do slide in the prevent plant side, so I don't think it increases the acres a lot there. The other thing that's going to happen is that within the fields, last year, for instance, you were able to plant completely through a lot of the fields. This year, you're going to have a number of potholes. So it's really way early to talk about this, but basically our planted to harvest percentage is going to go down from where it's been in past years. So, because there's going to be those spots out in the field are not going to be able to be harvested.
Is there a chance though for a producer out there to sell old or new crop at this point, or will there be an opportunity coming up?
Yeah, we really think at this stage the market's really got a little bit overdone, and it's really taken this market down too far. It's not to say that if ultimately we ended up getting the yields that they forecasted and the acres that they forecasted, could this market still go lower come harvest? Yeah, it sure could. But at this point, we think it's a little premature to basically take all the weather premium out and actually discount it at this point. We think we'll have another opportunity, at least one more opportunity yet, for this market to bounce higher. And that'll give us an opportunity to work on cleaning up those old crop bushels, also physically work on getting new crop sales on. The positive part about all this is it's given us very strong basis levels. The processor bids on the ethanol side in many areas are really scrambling to find corn. We're even seeing that in some cases on the soybean side. Rail bids on corn side going out and also on the soybean side actually have been really good. And ultimately that's been challenging some of these plants. They'll have to even bid more to get those bushels. So this has given us an opportunity to get some basis set up and then wait a little bit further down the road, and we'll be able to set the futures price on those basis contracts, Susan.
All right. Well, Kyle, we had a cattle on feed report that came out. Might not be as friendly as some would like to see. Let's break down those numbers.
Well, that's right, Susan. We did have that cattle on feed report come out here just a little bit here before we started our broadcast here. The on-feed numbers came in at 99.9%. They were expecting 99.2. The estimates of the estimates of the estimates is what I like to call them, because they are just estimates. And what the government gave us are just estimates as well. So the placement estimate was 99.4, and the government came on here. The USDA came in at 104.3. The marketing number 100.1 was the trade estimate. It came in at 100.2. So neutral on the on-feed and neutral on the marketings, but I'm going to call it slightly bearish on the placement. So what we need to see here, or what we're likely going to see here, is continued bull spreading of this market, which is what we need to do, or what we need to see in order to get this market to stay, get into more of a bullish type situation. However, we've known about less numbers coming at us for quite a while. And I want to stress that this is a futures market, so we could trade it in long before it actually happens, and then the party's over when it finally gets there, and then that's when people are scratching their heads. So I do want to stress that with what some of these folks are giving for calves and yearlings right now at the sale barn, you may want to look at some cheap puts, because volatility is extremely cheap right now on the live cattle complex and the feeder cattle complex. It's very cheap as far as option volatility. Unlike the grains where option volatility is at 52-week highs in corn, you're looking at very, very cheap options out there, to fit your bias as far as the live and feeder cattle go.
Well, gentlemen, our time always goes way too fast. I had a whole list of more questions to ask you, but I wish you a great weekend, and try to stay cool as those warm temperatures work in.
All right. Thanks a lot, Susan.
Thanks, Susan.
Kyle Bumsted and Jeff Peterson joining us this week. A quick reminder, commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And that's this week's Nebraska Soybean Board Weekly Market Roundup.